Good morning, y'all. Let's try that again. Good morning. Y'all. That's practice, y'all. Okay. I'm Wade Count. I'm one of the members of the Commodity Classic Committee. First thing we're going to do is take care of a little business that we've developed a new strategy for. We had a medical emergency yesterday in a session. If there is one, please do not all call 911. We couldn't get the ambulance here because we crashed the Denver 911 system. So if something happens, we've got our people that know who to call, and there is on-site medics, so we got that covered. Well, it's the early riser this year again, and we're just very pleased, very happy that Farm Futures, Farm Progress, and Channel Seed helped put this together. We're hoping to get some good news out of the economist up here, but a few more bookkeeping things that we need to do. Please take the audience evaluations and fill them out and give them to somebody or put them in a spot in the back, because on the committee, the only way we know what you want is to get that feedback. And I know it's a little bit extra time, but it sure helps us. Also, this session is approved for CEU credits, so if you need those, you can pick up the forms in the back. And without any further ado, I'll let Pam introduce her people and we'll get started. Thank you.
Is this working? Yeah, it is. Okay. I am Pam Caraway. I'm with Farm Futures magazine. It's one of the Farm Progress magazines, and we're delighted to have the early riser session here again. We've been talking about how many years we've been doing it. It's 11 according to Matt, and journalist math, I would say about 11, but he's the math guy. So Channel is our sponsor today, so I'm going to let Jared Thomas tell you a little bit about Channel and what they've got going on, and then I'll introduce Matt and Ed.
Thanks, Pam. Is this on? All right. Hey, thanks, Pam. So as she just said, my name is Jared Thomas. I'm the Channel brand lead. It's a pleasure to kick things off this morning. I want to thank everybody for coming to Denver. I know for a lot of you it was a long trip. Also, thanks for joining us here this morning. I know for some of you it might have been even harder to get up this morning, and depending on how late you stayed out last night. But we always appreciate this event. I think it's the perfect way to kick off Commodity Classic. We recognize in Channel that the seed decision is one of the most important decisions you make every year, but also the decision on when to sell your grain is also one of the most important decisions you make throughout the year. And so we hope to be the best in class on that seed decision, and we hope to play a small part in the grain marketing decision. A little background on Channel, and I actually have a history with Channel because back in 2009, I was an intern whenever I went to school at the University of Missouri, and I was an intern back whenever it was still 3 brands. It was Crows, Midwest, and NC Plus. And in 2009, a decision was made to bring those 3 brands together to form the Channel brand. And so actually my first job out of college, I was a Channel district sales manager in northern Missouri. And so to watch that brand grow over the last 15 years, relatively young brand, it's been really cool. And just in the last couple of years, we've now taken it to the next level on combining 11 different brands together. And you can see we've actually got a couple different logos up here. Ed, I got to give you a little crap because we've got a new logo that next year you'll have to get on your slides. But
send them to me.
But I think that symbolizes the growth that we're having as a brand. And we've done that to bring more focus, more energy, more horsepower to the Channel brand so that we can bring more solutions to all of our farmer customers. And, I think that's something that we're excited to look at here this week as we're launching our new Viconic soybean trait. It is a 5-stack soybean trait. Have 5 different herbicide tolerances. And so over at the Bayer booth, we invite you to come see us at the Channel portion of that booth, invite you to come learn about Viconic. Last thing I'm going to wrap up with, and I mentioned the two stressful decisions that farmers make, the seed decision and the grain marketing decision. And as this brand has changed, one thing that hasn't changed has been our partnership here with Matt. And so Matt's been a staple of the brand over the last 13 years of providing grain marketing advice just like this throughout the year. And so we have events like this throughout the year with Channel, but also Matt sends out an email that if you're a Channel customer, you get a personalized email 3 times a week that breaks down the grain marketing trends and the commodity markets to help you make decisions throughout the year. So just a little small part, again, that we try to do, not only to help you with that seed decision, but also with your grain marketing decision. I'll wrap up just by saying thanks again. Look forward to a great show this week. Look forward to a great session. Thank you, guys.
Thank you, Jared. So I'm here to introduce Matt and Ed. I think most of you probably already know who they are. And I was interested, Wade was saying they wanted some good news. I think the best thing that we can ever do for our farmers is give you tips about how you can do a better job of managing your grain in a way that works for your farm. And so today, while we're at the top of, what'd you call this, the Moguls that we're doing it?
Yes.
Yeah, so we're kind of on a black diamond run, right? It's scary out there, and these guys are going to be the ones that help you figure out how to navigate it and get to the bottom safely, maybe with a little bit of profit. So we have Ed Usset. He's up here on the screen. He's got a wonderful book. He's going to be at the Farm Progress booth later this afternoon signing those books and selling them for the benefit of the University of Minnesota. Ed is a grain marketing economist at the University of Minnesota, and he writes in Farm Futures magazine. It's the advanced marketing class column that you can get in print and online. We also have Matt Bennett, who is a farmer and founder of agmarket.net, and he also writes for Farm Futures, and you can find him and members of his team on Ag Marketing IQ on farmfutures.com. So, Ed, take us away.
Good morning. I don't know about you, Matt, but I feel a little exposed just up there looking out over the crowd. Put a desk in front of us or something like that. Difficult times right now. A lot of unknowns around tariffs and so on. I want you to know that 3 weeks ago, when I started to put my ideas together for my 20 minutes here this morning, I decided 2-3 weeks ago, I'm not going to talk about tariffs or trade. We're going to accept the fact that it's a cloud over our head, but I'm not going to talk about it because I frankly don't know how this is going to play out. And I think most people really don't know how it's going to play out. We've all got an opinion. A few of us will be right, but it's very uncertain. And of course, on Friday, the administration announces that tomorrow the tariffs go into effect against Canada and Mexico, 25%. So I can't help myself. I'm going to take you back let's look at a worst case scenario. This is the 2018 trade war. I want to talk about the sort of a worst case scenario of the price impacts at that time. In southwestern Minnesota, in early May of 2018, we haven't gone into a trade war yet with China. Soybeans were $9.60, give or take. Corn, $3.60. Up in northwestern Minnesota, we had wheat at $6 a bushel. The trade war went into effect in mid-May, and 10 weeks later, soybeans were $2 a bushel lower, down 20%. Corn was down 60 cents, also 20%, and wheat was only down 15%. Worst case scenario. I don't want to be a downer here, though, so I'm going to take you through some analysis I put together. I'm going to note that corn prices were very strong from October to January, remarkably strong, and it continued into early February. I know we've had a bad 6 to 8 day run in corn and soybeans, but the question I asked is, can the rally continue in the spring? So what I did, I went back to year 2000, and I gathered together every year, like this year, where we had a very strong move from October to January, more than 10%. In fact, all these years are 13 to 14% cash price rise. And by the way, I'm comparing the high in January to the highest price in October, not the harvest low, not the lowest price. And we had a nice rally in grain markets going into the end of September into early October. So I wanted to look, okay, what's going to happen now as we look out into the spring? If we can put the tariff notes aside, what would I expect from these 8 years? Now, typically, usually, prices in the spring are better than they are in January and February. We would expect that in most years. Last year was an exception. And here we are this year, way up, we're just way ahead of schedule. So being the contrarian I am, I thought about these 8 years and I said to myself, well, where is it going in April, May, June? Maybe we've already had our move. And maybe the odds of going even higher in the spring are more 50-50. This is what I found. Excuse me, this thing is touchy. This thing's touchy. Look at those 8 years. All 8 years, we found a way to go higher with the highest price in April, May, and June. Now, you're going to look at this and you're going to say, Ed is guaranteeing higher prices in the spring. Guys, I don't guarantee anything. I don't guarantee a damn thing. But I did find it very interesting that we found a way higher in all 8 of those years. Now, the prospects for higher prices, if we look at that history, it looks good. Maybe you're thinking, I should hold the corn longer, maybe in the late summer. Okay? And here I'm going to take a look at the highest price. These are all Iowa average prices, by the way. The highest price in the July, August, September period, the summer, relative to that AMJ price. And here I'll bring out one of my characters in my book. This is Hank Holder. I talk about Hank a lot. And we need to talk about Hank because this room is full of Hank Holders from last year. Okay? Hank is our perennial bull. He's always convinced that prices are going to go even higher. So he's going to see maybe hopefully this spring rally. And when I believe he should be making some sales or preparing to at least, he's going to wait even longer. Hank is breaking something I like to call the 11th commandment of grain marketing. And that is, thou shalt not hold unpriced corn or soybeans in the bin after July 1. I've said this for 25 years now, talked to groups about it, and people, of course, how can I put such a bright line on one day of the calendar, July 1? Well, let's go back to this seasonal price pattern of corn prices in Iowa. And by the way, this seasonal pattern is driven by the production cycle. It goes back 100 years, and it applies to every state in the Corn Belt. That is, corn prices tend to be lowest in the fall at harvest, highest in the spring, early summer, and then, do you see July 1 on the map there? It's right there. It's right in front of your eyes. That's the pattern. Now, you're looking and you're saying, yeah, but there are exceptions. Yes, there are exceptions. There are exceptions. Hank will go home with the gold medal once out of every 5 years. It's the other 4 out of 5 years we don't want to talk about. And he has a hard time in this competition. By the way, a few years ago in southern Minnesota, I had a talk with producers about Hank. It was the middle of August. And I told them, thou shalt not hold unpriced corn in the bin beyond July 1. And then, like a preacher, I said, and how many sinners are in this room? Son of a gun, just sheepishly, more than half the people raised their hand. I want you to think about this. I asked the people there, I said, well, why do you still have corn? Guy says, well, when you're running cattle, you got to feed the cattle, and I said, well, yes, of course. I said, how many cattle do you have? He said, well, actually, Dad sold out of that 20 years ago. I went to the next table, and I said, why do you have corn in the bin? He says, well, when you're milking cows, you gotta have feedstock available for those cows year round. I said, oh, how many cows do you milk? He says, oh, we took the buyout 30 years ago. Farming has changed. And I think in this room, I came to realize that a lot of Hank holders are simply applying an old habit. That is, got to have corn in the bin in the summer. But if you're not feeding livestock, you're not into hogs, you're not into poultry or dairy, it's okay to have an empty bin. So how did we do here? The July-August SEP high relative to the AMJ high. 6 out of the 8 years we went lower. Is this a guarantee that we'll go lower into this summer? No, son of a gun, Hank is due for a victory one of these years, and he will win again. But I want you to think about this, because it hurt us a lot in the last year. Let me give you a little update on something I talked about 2 years ago, the coming boom in the soy crush industry. I showed this map 2 years ago, and I said that I knew of 17 known expansions or new soybean crushing facilities going up throughout the country that would increase soybean crushing capacity by 25%. And at the 2 years ago, I thought this was a very friendly thing about the soybean market, and I think it is. Let me give you an update on where it is. This is, as of February of this year, 9 of those 17 plants are up and running. 2 of them I'm unsure about. They are expansions of existing plants, and I'm quite sure they are up and running. They just don't necessarily put out a press release on it. We have 6 more due to open in 2025, 2026. This is all driven, of course, by renewable diesel, right? We are anticipating, and we have seen growing demand for renewable diesel. Here's the problem, and here's a little Colorado terminology for you. The soybean industry might be getting out over its own skis. That is, if you follow the work, and I'm going to suggest you do this, there's a Professor Scott Irwin out of the University of Illinois. Scott Irwin's writes about this. He's got some videos on it. He talks about this. Scott Irwin has added up all of the state and federal mandates and tax credits and all the things that are going to build renewable diesel demand over the next few years, and it's impressive. We've got a big demand coming. The problem is, you add up all this new capacity, we even have more supply. So the soybean industry is not only suffering from bad relations with China right now and exports being on the defensive, but we've got a domestic crushing capacity, which is growing, but we've got the capacity growing even faster. Last thing I want to leave you with, we got to look ahead to 2025 and new crop pricing. What I was talking about before was old crop. December corn futures closed on Friday, 455, I think off 20 cents from its recent highs. November 25 soybean futures at 10.30 a bushel really aren't that far off their life of contract lows. This is something I actually showed you last year. I'm comparing the April, May, June high in December corn to the January high in December corn. And as you can see on the far right, 4 out of 5 years, the corn market finds a way to go higher than the January high. I know we've had a sell-off. I know we've got this tariff cloud hanging over our head. But I like to believe we'll find another chance, and I hope you're ready to get something done when this hopefully happens in the spring. Soybeans are a little less predictable than corn, and yet 2 out of 3 years, I would expect to see November soybeans take out that January high, which was $10.64 this year. I'm going to wrap up. We got to give Matt some time. I do teach 2 courses at the University of Minnesota, commodity marketing and futures and options markets. In fact, 2 hours from now, I am going to conduct a distant lecture at my hotel room. If you are interested or know anyone who is interested in taking these courses remotely, send me an email. I would love to set you up. And finally, I always like to point out that you have these evaluation forms in front of you. I get evaluated every year. Last year I shared with you a zinger from myself. I get a lot of nice evaluations, but they're not fun. Let's talk about the zings. I shared this last year, that I found the material painfully boring, which was topped last May by someone who told me that the lectures were brutally dull. And I'm a little upset that people up front here are nodding their head. Okay. I lugged, the term lug applies here, about 24 copies of my book, and as I did last year, I'll be at the Farm Progress booth, number 120 at 1 o'clock today. If you people make me lug those damn things back to Minnesota, I'm gonna be PO'd, okay? $30 with my signature, and now I think I should turn it over to Matt, a man who has never been, whose material has never been painfully boring, and whose speaking has never been brutally dull.
Thanks, Ed. All right, am I on? You guys hear me okay? All right. As Ed said, it's been a tough go, especially the last couple of years. The last few months, though, I mean, other than last week, we're pretty good. I mean, quite frankly, we were in a pretty good situation, and then all of a sudden the rug gets pulled out from under us. And I know several of you have asked out in the hallway, hey, can you please bring us some good news? I'm like, I don't know if there's another session, going on this morning, but, I'll do my best. I mean, what has changed? I mean, what changed over the course of times? I mean, the January report changed a lot of things. You had a ball rolling downhill, and then we just picked up steam because we extracted stocks out of the balance sheet, both corn and beans. What are we going to plant in 25? I'm going to go into a lot of detail there. Talked about this the last couple of years. Risk management is more than pricing your corn and beans. And so for the 23 crop and 24 crop, when we prepaid, we had pretty decent corn prices. And the bottom line is we had very high fertilizer prices. Why? Why was fertilizer so high? Because of what I just said, because corn was fairly high. And so I think that timing those purchases, we could have done a better job of. Clearly, political uncertainty could plague world trade. I think it's on a lot of traders' minds right now. I'm not going to go into a lot of detail there. I just want to bring it up because it's a no-win situation. So if you guys have got a political question for Ed or I, we're not going to answer it.
Yeah.
I'll just tell you that up front because we don't know. I mean, Ed and I talked about this ahead of time. We're talking about tariffs. I said the thing is, I don't even know if the powers that be know what they're going to do at this point. It's a fluid situation. And then without a commitment to renewable fuels, I think the U.S. grower has got an uphill battle. So, we have to have a commitment to renewable fuels. Now, some of you guys know I spoke at the USDA Outlook Forum this last week. First time I've had a chance to do that. And of course, starting out that presentation, I was sitting next to Seth Meyer, the chief economist, and I said, hey, you're not going to like my first slide. And he said, why is that? I said, just wait and see. And this was my first slide for USDA. When I die, I want the USDA to lower my coffin so they can let me down one last time. Some of my business partners thought that was a little gutsy, but I went ahead and did it anyway. I'm serious, I did it. Well, you look at corn. Look at corn here. 2022, this came from Seth actually, and this is fascinating. We've gone down each year for the last, this will be 4 years in a row. It's been a deflationary environment. It's been a tough environment. The problem is whenever we made a lot of money in 21 and 22, all inputs do what? They go up. And so naturally, whenever corn prices come back down, inputs come down too, correct? I don't think so. So it's been a challenge. Now I'm going to move rather rapidly because I've got a lot of ground to cover. Principal crop acres. You know, we jumped up in 23 to a level that we were at in 2015 through 18, which were not historically profitable years. And you say, well, after 21 and 22 making all that money, you'd think that acres would have gotten bigger. The problem is, guys, we don't have as many tillable acres in the U.S. as what we had in 2018, correct or incorrect? You better believe it. I've told this story a lot this winter. So we've got a farm that we paid $4,500 an acre for. It butts up to the edge of the town we're closest to. I've got a substation 2 blocks away. Who do you think I've been hearing from? Solar. And so the latest, highest offer I've had was $3,300 an acre per year. And if I said, well, you guys think I should do this or not? I'd say a lot of you would say you're an idiot if you do it. And then a lot of you are going to say you're an idiot if you don't. And so, I mean, it's up to you. You do whatever you want to do. I'm not going to give you advice on that. What I can tell you is this. We are losing tillable acres. Who's not losing tillable acres? Brazil, for sure. Now, also, they've got a little bit of a thing called the currency that works in their favor. Recently, it was a 22-year low versus the U.S. dollar. And as of right now, your bean market, your export situation, I mean, you're significantly more higher priced as far as U.S. beans are concerned. And that's part of the reason that we're struggling. Whenever we talk acres a little bit, the soybean to corn ratio, this was about a week ago, and clearly it's changed somewhat. But we were at a multi-year low. And so the problem that we've heard all over the place as I've done presentations, I can't make money planting soybeans this year. And I'll go into more detail there too. Funds. I mean, when the funds get to the long that they've had recently of 350,000 or more, you see much higher prices than what we got up to, which was just barely over $5. And over the course of the summer, whenever they were at their biggest short position to the recent high of their long position, you're looking about a 700,000 contract purchase. And with that being the case, you would typically run the market a heck of a lot stronger than $1. Why did this happen? Because a lot of us were Hank holders, right? And we held on to corn way too long. And I'm not beating you up because we typically get, a weather rally at some point in the summer, and it never manifested itself. But the problem is that as the funds realized this thing can't get any worse, we're going to start covering these contracts. The farmer had to sell in a lot of cases because we were going to harvest. Then we got into harvest. And whenever you talk about, for instance, how this whole thing played out this last fall, a lot of us were sitting here saying, I don't know if I want to spend 20 cents a month to get out to Jan 1, right? Because we got a $2 billion carry, is what we thought. And so I don't think everyone was particularly thrilled with that January report, were they? I mean, it was bullish, but if you don't have any corn left, I don't think you're too happy about it. There's your crude oil chart. What's this administration said we're going to do when it comes to energy? Drill, baby, drill. Drill, baby, drill all you want. That's how you're going to fight inflation. But guys, if we don't have a commitment to renewable fuels, we have problems. How many of you guys struggled to make money on corn in 24? It's like 8 honest people in the whole room, right? This is what the farmer looked like trying to make money in 24. It's funny because it's not funny, right? World corn supply and use. In simplistic fashion, 304.8 to 290.3 over the course of 2 marketing years. What you're doing is you're using more corn than what you're raising. That's a really good thing, of course. That's friendly. I'm going to show you a chart on it in a little bit over multi-years. U.S. corn supply and demand, 1.54 billion bushels. In the old days, that was a lot of corn, but 10.2 stocks to use isn't exactly a burdensome amount of corn. And so with that being the case, last year, you were talking about all this carryout's just going to keep getting bigger and bigger and bigger. The 1.54, how did it compare to last year's February Outlook Forum? February Outlook Forum last year was 2.5 billion bushels. They were assuming normal production, big yield, big acres, and we only came in a billion below. So the thing is, demand was fantastic. Now, if I look at my balance sheet, okay, I'm saying we're going to have a lot of acres here. Outlook Forum was at 94. I think we come in above 94. This is what me and my team use to forecast what's going to happen in the reports. All right, if I use 95 and a half and I pull in this 1.54 billion bushels, if I keep demand constant, I'm just a shade under 2 billion. And you say, well, this demand, it just continued to surge. Absolutely, it did, because what was the function of cheap corn? What was it supposed to do? Incur demand, and to cure what? To cure cheap corn, and that's exactly what we saw happen. So demand has surged, but how much more demand can we expect is the question. And I think we got to be very cautious in our thinking. If we look at stocks, I mean, we had record disappearance, furthering that line of thought. In the first quarter, the most corn that we had used in a quarter, okay? And a lot of this, actually, our exports were pretty darn good. Ethanol's good. But we had huge disappearance. Now, if we want to talk acres, I mean, I put 95 on here just to show you. 2 years ago, we planted 94.6. I think your corn to beans, beans to corn guys, yeah, they had a big bean year last year, relatively speaking. I think 94.6 is probably the basement. I mean, I get into the upper, like northern Iowa, Sioux Falls, some of the areas that I've spoke at this winter. I've asked the crowd, how many of you are going to plant more corn this year than what you did last year? And a ton of hands go up. I just ask you here today, how many people in this room are going to plant more corn this year than what they did last year? And it's hard to tell how many, but there's a lot of hands that just went up. All right, so I do think that acres are going to be fairly large. Now, this slide stuck out to me like a sore thumb for those of you that were frustrated with how the USDA reports went this year. This was a NASS slide, and whenever you ask USDA officials about what they're doing over in NASS, what they tell you is that's a different department, But what I'll tell you is in November, we should have seen this slide and noticed that this was going to be the third largest as far as ears per acre that we'd seen in the last several years. And if you can't tell that there's a distinct correlation issue with 2024, because the yield is the red dots. If you can't see that, borrow your neighbor's glasses, because 24 is clearly different than the other 5 years. And what you can garner from that is that yield was too high in the November report. We knew yield was too high. You say, well, Matt, what'd you guys forecast for January? We thought a bushel lower. We clearly missed it because they came down 3.8, but was it unprecedented? Absolutely not. In 2020, they actually dropped around 4 bushel or a little bit more. And so the thing is, we got to understand that these things are fluid. They can change. Of course, everyone put in the USDA report probably didn't agree, with staying at 183 in November, but that's the number they came up with. They have to come up with one number. Now, if I look at stocks and stocks use ratio, as far as the U.S. is concerned, we kind of had an uptrend, and then this year we kind of dropped back down, but world stocks are at a multi-year low. And so you want to know, why were the funds potentially buying? I'll ask you the question as a crowd. Would you rather have a demand-led rally or a supply-led rally? Demand-led rally, because you've got staying power, correct? And so why were the funds buying? Because they see that we are using more corn than what we're raising. And whenever you get a really explosive market is when you have a demand-led rally that it has an intersection with a supply shock. And so in my opinion, the funds decided to build that long to see what would happen. Now, this is a sobering slide here. Since 2015, 9% increase for U.S. corn production, 83% for South America. I mean, that is incredible. And we had a guy at our ag market conference this year that was talking about irrigation. He's from Brazil. He teaches at the University of Nebraska. And he said their goal is to take average yields at the safrinha crop from 90 bushel to around 150. And they're adding acres. Now, Ukraine, real quick. Ukraine, guys, we took about 5 million hectares out of production. I don't think it's all going to come into production this year. I want to point something out, though. If you look, 10 million metric tons above this past year is what they were averaging as far as corn production was concerned. So if you look at world stocks, when you throw Ukraine back in, all of a sudden you're no longer dragging world stocks down. I don't know that we'll get a lot more production out of them this year, but it's coming. Why is that important? Because you look over the course of time, and there's been times when Ukraine's almost exported as much corn as what we have. And the green line there is South America. They're exporting more corn than what we are. We're losing world export share. And so what do we need if we're losing world export share? We need domestic consumption in the worst way. That's why I think we need this renewable thing to be as good as can be. But look at this, corn ending stocks from our major exporters. If you look at Ukraine, Brazil, Argentina, 400 million bushels below where they were a year ago. Where did all these exports come from for the U.S.? Because these guys are whittling down on stocks. And so, again, that's part of the reason why I think we could be reactive. We could be reactive to some sort of weather issue this summer. Now, ethanol exports, you look at Canada takes 40% of the ethanol exports. Tomorrow, that could be a problem. We also import about, 85% of our potash out of Canada. That's what the chart looks like. A couple of people asked if there's been any chart damage done in the last week. Well, I don't know. It looks to me like pretty serious chart damage in the last week. There's your old crop chart, but that's what your new crop chart looked like. And clearly, December corn looked fantastic coming into this drop back in prices. Now, I'm not saying the market's completely over yet either. I think there's a chance. Let's talk soybeans. Soybeans, world soybean supply and use. Basically, you're going from 101 to 124. It's about 23%. That's a pretty big jump. There's no doubt whenever you look at the world balance sheet, it's problematic. You look at the U.S. balance sheet, it's not near as problematic as what it was forecasted to be previously, but 380 is still a lot of soybeans, guys. And so if I look at this, though, if we're forecasting big corn acres, what does that mean for bean acres? I mean, they've got to be lower. How many of you guys in this room would say it's going to be really hard for you to make money raising soybeans this year? Right? And so I think that that's something we all have to pay attention to. All right, now if I look at 82.5 million acres of beans, and I'm not saying that's where we're going to come in at, if I hold demand constant and give it a 51.7 yield, it gives me about a 259 carry. So what is going to happen if you have excessively high corn acres is that from a domestic situation, I think you get a little bit of support because you could get really tight in the balance sheet here in the U.S. The problem is I think the world's going to have way more beans to make up for that. Higher stocks and stocks-to-use ratios whenever you look at the U.S., same thing as far as the world. World minus China, it's not going to be an all-time record, but you're looking at a whole lot of stocks in the U.S. Now, it's different for soybeans, 11% increase since 2015, 42% for South America. You say, why is that? Well, they've been planting beans longer than what they've been planting corn. And so bottom line is these guys are going to continue to raise more production. I mean, they are expanding acreage every year. Beans, I think it's been averaging about 3% for the last 15, 20 years, each year. How much are they exporting? About 3 times what we are. Right? Now, how many of you guys feel like we're going to gain global export share again? And I don't think it's going to happen. When Ed was talking about renewable, I mean, clearly, and Scott's work's fantastic, and I've read a lot of it as well, but we need all that demand we can possibly get because we're producing a ton of beans globally. And so if we're going to have any luck domestically, we've got a big road ahead of us. Now, crush margins have not been great. It's the purple line at the bottom towards the middle. Crush margins are multi-year low. You say, well, we must not be crushing any beans. Well, that's wrong. We've been crushing a lot of beans. Why? Because Ed's slide that showed you how many more crush plants we've got. We're crushing a lot of beans right now, even though margins aren't great. But if you're 70, 80 cents a bushel to buy the beans, crush the beans, and sell the meal and sell the oil, you can still make a living doing that. And so we've got to hope that we can keep this crush as strong as can be. But what's the Department of Energy say about our expansion? You know, we've expanded, like Ed showed that slide, but are we going to see any more expansion? Not without some sort of a major commitment to a renewable fuel standard, or, you know, you take the biodiesel tax credit away, and that certainly was problematic. Where's that going to end up at? I don't know, but it won't be at $1. So that's what the bean chart looked like as of the close this last Friday. Nothing really to gain here. I mean, the bean chart did not have that nice uptrend. Corn chart obviously did, but you look at November beans, and I feel like November beans were trying to kind of keep up a little bit as far as December corn was concerned. But again, the problem is if people say, well, the ratio's changing, that might change acres. Well, it's not going to change acres if you still can't make money planting beans. And so maybe you're going to get a shot in the arm at some point if you can get acres low enough to get the market's attention. So managing risk, we're going to talk mostly about profit margins, about money. In the first slide, this guy says, of course I haven't made a payment on the tractor. You said it would pay for itself. All right? Obviously, new equipment hasn't been moving as well. If you watch some of these used equipment markets, like auctions in November and December, I think that was a pretty good indicator where the ag economy was and what everyone was concerned about. I mean, some of those auctions were incredibly cheap. But bottom line is, this has been a tough spot. Now, I think whenever you look at the ag economy barometer from Purdue, it's very interesting to see you had a major spike right before the end of the year. What was that spike? What caused that spike? The election. Everyone, I would say, it had a whole lot to do with it. You might say, well, it was the money that we were going to have sent to us. I look at the money that we're going to have sent to us on this disaster payment, and I'd say it's maybe a third or a fourth of what we lost by not keeping our corn, you know, if you're catching my drift. I don't think anybody's going to turn it down, but yes, this is Trump. But here's the thing, guys. This is the index of future expectations versus current conditions. And clearly, most people were expecting that their life was going to be 50% better off than what it really was at the time. And I'm not trying to get political here, but when's the last time you saw such a large disparity in this chart? 2016. And where did we end up? Did we end up where everyone thought we were going to go? No, we leveled out at a much lower level. And so I think this applies to marketing as well. I don't know how many of you guys told me that if we get July corn to $5, by God, I'm selling everything I've got. Then I call people up, what do you think about selling some $5 corn? I think it's going to go up a little more, right? I mean, and that's how we work sometimes. We think we're going here, but we're not willing to do anything on the way. I want to sell incrementally as the market rallies and give myself an opportunity. If I look at this study from the University of Illinois, I'm getting close to the end here. This was as of the end of October, 1st of November. They said the average farmer is going to lose money in central Illinois 2 years in a row. What region? This region right here, the orange region. All right, and so they said to be about $130 an acre is what we're going to lose. These were actual farms, FBFM farms. What do you think that region in Illinois, whenever you had an average yield of 218 last year, what do you think that region averaged on yield? 230? Is that fair? 230? How much did cash prices rally from fall harvest lows to closer to the highs? $1? Anybody see cash prices go up $1 in your area from that in that time frame? All right, so what's 230 times $1? Ed, we got a problem in here.
I'm not sure either.
He's a professor.
Yeah.
It's $230, Ed. I'll just help you with it. All right. So here's the thing that frustrates me. I talk to guys all the time that's got a lot of old corn sitting around. Now, I think the farmer's down to 25% or less nationwide. We've sold a ton of corn. But I'll talk to guys that's got 80% of their corn left. What do you think the number one question is they ask me? How much more are we going to get out of this market? What should be the question? How much do I need to sell today because I'm $100 better off than what U of I said I was going to be? Guys, we get way too wrapped up in the wrong things. You guys get bullish when the market goes up, correct or incorrect? That's the way your mind works. And so when you get really bullish, sell some corn. Sell some corn. Because we made a ton of money in 21 and 22, guys. A ton of money in 21 and 22. That's what the farm income operating ratio, I mean, that is a ton of money. But what's the problem? You dropped to 4% in 23. And obviously 24 wasn't very good. So as I wrap up here, did we have a fertilizer shortage in 2012? No. What did we have? $8 corn. Did $8 corn have anything to do with fertilizer going up? Absolutely. Okay? So if we do get some sort of weather rally this summer, and some of the weather guys are right, and the market rallies substantially, is fertilizer going up? You better believe it's going up. Next time you get the luxury of paying a lot for fertilizer because the price of corn is excessively high, what should you consider? Maybe you sell some corn when you buy your fertilizer. Lock the ratio in. Interest is obviously very high, but my last slide here, 2018 to the forecast for 2025 is that interest on operating capital is going to be 145% more than what it was in 2018. Now, how many people in the room have paid 15% or more on interest rates at some point in their career? Several of you. You know, and so I went over this with my dad. My dad said back in '85 he was borrowing money at like 18%. 18%. But he was only borrowing about $50,000. It's pretty common for people in this room to tell you that they're going to be borrowing $1 million or more. I'll tell you what, you want to figure out your break-even price of corn. If you're not factoring that $80,000, you're missing the boat. Guys, it's expensive to farm. And so we've got to be careful. Bottom line is, moving forward, if you get opportunities here, incrementally reward the market. I think you've got a chance due to weather patterns, due to the fact that the funds are still a little bit nervous. Maybe you get a shot at a market, but don't sit here and hold on like we did a year ago way too long. If you've got old corn, maybe you get an opportunity, but if you get out of it, what do you have? You got new corn to sell. All right, the farmer's always long. So if you want my slides, you can snap the QR code and then get ready for any questions. I don't know how much time we've got left. Probably not a lot, but you got 10 minutes?
We got 10 minutes.
Awesome.
Let's do it. How many of y'all are accustomed to economists being entertaining? I'm not.
We have a question right here. Pam?
Except I get to listen to these guys a lot. So we don't have Vanna White, but we have two guys in the audience to help get some questions for these folks.
All right, Stuart Sanderson, farm down in North Alabama, corn, soybeans, and wheat. Not so much a question, but I think one of the biggest problems in the room, and I go to a lot of ag meetings, talk to a lot of farmers, and guys, let me implore you about something. Less than 9% of the growers in this room probably have some kind of risk management marketing program on their farms. Am I right somewhat on that percentage probably? 2018, it was 7%. So on our farm, I do all of our marketing. It's what I do. I have a degree in this kind of stuff. Give you an example. We're talking about cash sales and what it looks like right now. It doesn't look good. For November 25 beans, I've got a 1202 average on my hedges. When did I do that? May the 10th of 2024. We haven't planted the 24 crop yet. My corn, I sell corn in July, but those were December hedges. My December 25 hedges are higher than the July hedges right now, but what happened, 21-cent carry to July. Then I factor in basis. So I've got a 580 with the basis they're shooting at me, in which I know basis varies all across the country. And that's a difficult animal to tame. But I've got 585, 590 corn coming to me in July off a 25 hedge. Try something, whatever your comfort zone. I'm just imploring this to everybody because working capital, as we just saw right here, is going to break us because we don't have it anymore. There's always times in the market to grab some of these positions. It's scary because you don't fully understand it, but just like his book said, it's simple, but it can be hard. So just get with some kind of program. I'm just imploring. We cannot survive in the United States as agribusiness men and women only if 9% or less of us have some kind of risk management marketing.
Thank you very much.
Thank you. Any other questions?
This is your chance. Yeah, we got one right here.
We got one right here.
Hold on.
My name's John Carroll, and if we had Eric Snodgrass on the stage right now, how would that change our opinions?
That's a good question. So Eric spoke at our Ag Market Conference in Nashville this year, and he has a very scientific approach towards getting to what he's forecasting to be a 60% chance of drought. And so that's the reason why, for instance, if I say incrementally sell, and the thing is that both Ed and I are constrained to 20 minutes up here. We could talk for an hour and a half. And if I could, I would tell you with my marketing plan this year, I want to have some flexibility because I think about a year like 2012. We just talked about it briefly. And in 2012, the market was like this in the wintertime. It really wasn't all that exciting. And then you go to levels you haven't seen since 2008. the market gets up to 550 and 6, and we'll take that with both fists, right? And we're selling 30, 40, 50% of a crop, and then some of us raised 40% of a crop. And so we've got to be cautious in a year like this to get overhedged on physical bushels. So if I'm listening to Eric, I'm going to do stuff that puts floors under the market, and I'm leaving myself flexibility to run to the upside, because the last thing you want to do is buy bushels back if we don't raise a crop.
Paul from Iowa, just a very general question. What might happen with these proposed or threatened tariffs?
Good grief. You go,
tried.
Matt. You're on a roll.
I tried.
You know, that's the great unknown. We just, you know, we can, I showed some numbers for how the trade war impacted prices very sharply, very quickly 7 years ago. Trade is so important. I know that 5 or 6 years ago, my whole 20 minutes was dedicated to reminding everyone here how important trade was to agriculture. I talked about, you know, trends in corn exports, soybean exports, wheat exports, all very important. On the trade floor, there's a U.S. Meat Export Association. Do you know how important meat exports have been over the last 20 years? We export 25% of the pork produced in this country. And most of it, much of it goes to Mexico in the form of hams. They love our hams. It's, I can't tell you how dark that cloud is with tariffs.
Oh, I was just wondering if you could talk about what products specifically go to Canada from the United States, what you're watching. I know you can't say for the tariffs, but just what products might be affected. And also, can you touch on corn, especially going from the United States to Canada, and how you think the tariff focus might affect it?
I mean, we touched on it a little bit, but like I said, they're taking 40% of our ethanol. And I mean, I think that's one of the big concerns, because we've been exporting a ton of ethanol, and we had record ethanol exports this last year. And so that is my biggest concern.
We're not sending a whole lot of commodities to Canada. They're surplus producers too. We import a lot of hockey from Canada. I know that.
You both mentioned the need for expansion on biofuels. I don't know that we could point to Trump 1.0 as being particularly friendly to the biofuel industry. Is Trump 2.0 going to be different?
That's a tough question. You know, I was out there at the Outlook Forum, and speaking of Canadians, you just heard from one, by the way. But, you know, Brooke Rollins spoke yesterday, I know. I listened to her there on Friday. She sounds very friendly towards biofuels, but talk is cheap is the way I look at it for right now. I'm concerned. And clearly the reason I'm concerned is because whenever we look at, again, we're going to struggle with our global competition. We have to use more domestically. I have a slide I use sometimes which shows you over the course of time, exports continue to dwindle while crush continues to go up whenever it comes to soybeans. If you don't see crush continue to go up because we need them here domestically, we're in huge trouble. So I can't give you a good answer on it. It's concerning, and I think that's one thing everyone needs to be very outspoken about, because without renewable fuels, my concern is that rural America look a lot different here in about 10, 15 years than what it looks today.
Tommy Young, Arkansas. I really appreciate this meeting and the name of it, The Slopes. Do you feel like, in your professional opinion as advisors, over the next couple of months, what's the timeline of our slope or our fall? Simple question. I need to know badly.
Well, if you looked at the corn chart, clearly, you know, we're looking for a ski lift somewhere after the last few days, right? Because it's straight down. I think what the funds, for instance, which are going to push the market around, what they're looking for is, are you going to have Mother Nature cooperate to where we can have these big corn acres? Are we going to have a decent safrinha crop? The Brazilians certainly are going to plant as many or more corn acres than what they originally intended because we got that rally in the market. And they may actually throw some more at it. I think that if you have a good safrinha crop and you have big acres, you've already eliminated two things. I don't know that the funds want to stay long just to see what the weather's like this summer. I'm a little bit concerned there. But the last thing I'll tell you, as far as ski slopes are concerned, the farmer doesn't own a lot of old crop corn. I already said that, right? And so when is a rally most exaggerated? When you don't have a natural seller. And so if you don't have a whole lot of hedge pressure and you get into some sort of weather market, you could see, you know, a pretty dynamic corn market. As far as timing, I'm like Ed, and I've tried to learn from Ed over the years, listening to him whenever we've presented here, but you don't want to wait too long into the summertime. Last year, it absolutely strangled the U.S. grower. Absolutely. And so, you know, I'm looking for a rally in that spring planting time frame. I think you'll get basis pops, but at the same time, if tariffs go ahead and go into, I'm afraid that we're going to continue a little bit lower yet. And the market certainly started out the week that way.
Thank you very much. We appreciate everybody and all your questions and coming in today. We especially appreciate Matt and Ed for giving us this advice. For those of you who still have a question or two, you can always find these guys on farmfutures.com, and you can find them here at Commodity Classic. Ed will be at the Farm Progress booth this afternoon, and you've got a booth too, right, Matt? Mm-hmm. So look at agmarket.net and go by and visit his whole team. Thank you again.